So guys, many of us struggle marking up a chart. We try to find where support and resistance is. We don't know where the break and retest is. There's a lot of basics that we have forgotten or just wasn't taught. So in this video, I'm going to show you how to actually mark up your chart. Now you got to bear with me because I'm going to start with the basics and then showing you the actual chart, finding where support and resistance is from a blank chart. Because if you can find where support and the resistance is, you can know when to enter and when to exit. So you guys want to watch it from the beginning and end. Be sure to like, subscribe if you haven't already, and share this with a friend that you love, even an enemy that you hate. All right, let's get into it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you, so I put it on my own.
What is support and resistance? Here's a support, also known as the floor. Now look at the bottom of that line here. Think of support as holding up, supporting. When you think of support, you think about holding up, like crutches. Crutches are meant to help hold you up as you walk. Think about when you're supporting a child, you're assisting or helping that child, okay? So think of it as the floor, that's the bottom line. And then resistance is the top, known as the ceiling, in which it bounces off. So resistance is like resistant, okay? So whenever price goes up, you're expecting it to move down. Whenever it hits support, you're expecting it to move up. So this can help us predict where price is going and when to buy and when to sell. So we have candles forming, going up, starting from the support up to the resistance, doesn't quite hit the top, and that's completely fine, comes back down. And guess what? Price comes back down to that support, that floor. Now, because I know that this is a support and resistance zone, I may want to buy right here. And if I buy, guess what? Price goes up and I profit. Price comes up, touches the resistance zone. Notice how the resistance zone is blocking it. So if I know that's resistance, a higher chance that I can sell and profit. So as price drops and I sell, I can make money. So this is called support and resistance zones. Now, this isn't just on your chart. You have to actually draw it, and you have to use your eye to determine where support and resistance is. And I'll show you how to do that. So as price moves up, it's being supported by that support, and it's going in between that area here, your floor and your ceiling. Now notice that last green candle. It's slightly outside of the ceiling, and that's completely okay because ultimately that candle is still within that rectangle of support and resistance. So because I know that's a resistance area, I may sell. And guess what? I profit. I may buy and I will profit. So notice how price is bouncing off the floor and the ceiling. That gives you a good indication of when you can buy and when you can sell. This is also known as a range or consolidation. So when price bounces off your support and resistance zone continuously, that's called a range or consolidation, okay? And it helps us when to buy or when to sell. Sometimes we may even see wicks poking through the barriers. Now, remember I told you what wicks are. These are just perfect candles that I created for you, but you may see wicks coming out of the candle like that, and that's fine. If it's outside of the floor or outside of the ceiling, that's still fine because typically it's still within that area of range, okay? Now, let's go ahead and draw our own support and resistance zone, okay? So when we look at a chart, we don't know where support and resistance zones are, but I'm going to train your eye to find them. Okay, here's my support in this area, and here is my resistance zone. Out of all of that chart, I'm just going to take this chunk here and find my support and resistance zone. Now, eventually, price is going to break through the ceiling or break through the floor, but for the most part, we're going to find our support and resistance zone, okay? Why is this my support and resistance zone? Because I notice candles are respecting that area. It's bouncing off of it multiple times, right? That's my ceiling. So when price comes to that area, I know that there's a higher percentage that price will go down, which gives me the opportunity to sell. Now look at my support. Price is at this area. It hasn't shot below it multiple times. So I know when it's usually around that area, I can buy. Okay. So that's support and resistance in a nutshell. Let's go ahead and find more support and resistance zones within this chart. I'm going to draw a line right here for my support and right here for my resistance. Now notice how price broke through the previous ceiling and then it starts a new support and resistance right here. So we see price going up and going down. It's ranging or consolidating, right? So it becomes predictable to the point where I may know where to buy or sell until eventually it will break through. So this is an uptrend. It will range, break through, range, break through, and so on and so forth. So prices broke through finally. And guess what? Here's my new resistance. It comes down. Here's my new support. So now I can buy and sell multiple times again. Here's where the price is at. I may buy, and look, price goes right to where previous resistance was at. What a coincidence. You will find this very often in an uptrend or a downtrend. So look at that straight line, okay? In other words, my previous resistance equals my future support or my current support. In other words, my previous ceiling becomes my current floor. And it gives me predictability when to buy. So I may buy right where my current floor is. And this is called a break and retest. You know why? Because it is going to the upside, breaking through the ceiling, and then retesting to where price was at before. Notice how those two circles is where price was at before. And I can draw a straight line. So my previous resistance is now my current support. And guess what? Price shoots up, comes back down, retests that same area. And I can draw a straight line and continue to buy until eventually will run out and become a downtrend. All right, guys, so I want to remind you to hit that like button if you haven't already and subscribe. Make sure you save this to your YouTube playlist so that you can come back and revisit, and then share this so other people who are looking to learn technical analysis can also learn. We really appreciate you guys. We take a lot of time into these animations and just to teach you guys as simple as possible so that you can grasp it the best way you can. What are trend lines? Trend lines are drawn on a chart to help a trader determine the direction of price from a point in time. Traders may also use trend lines to help pinpoint buying or selling areas. Guys, this is one of my favorite topics here. All right, guys, so we're looking at the weekly chart, and we're going to look at the Great Britain pound versus the United States dollar. Here's my fake chart. And on the right side of the chart, we're going to have our price, like I showed you in the previous slide. And at the bottom, we're going to have our months, okay? It's like a graph. That's all that is. It's a graph of telling you where price is at and where it's going and where it's been, okay? Here's my demonstration of trend lines, okay? We have our low connected to our high. Price will pull back to our higher low. Then it will go to our higher high, to our higher low. And guess what? It retests back to our previous high, giving us a straight line. And it tells us where we may want to buy. We buy on the higher lows in an uptrend and draw your trend line connecting both lows, just like that. Now, sometimes our lows may not connect exactly, but you want to grab your trend line to the lowest of the lows and try to grab as many higher lows as possible. And then as price continues to move to the upside, it gives us indication where we want to buy at. We want to try to buy closer to the trend line as possible. And that's known as our support trend line. So here's another illustration here. We're going to, one, identify at least two lows, then connect your trend line. Here's our two lows right here. And then price will go up. So here's our trend line. We don't quite know exactly what's going to happen. Number two, we're going to wait for the impulsive move. Here's our impulsive move. Number three, then wait for the pullback to close near the trend line. And as it pulls back, we go to number four, then enter the buy on or near the trend line. Right here is where we're going to enter our buy. And then five, we're going to collect your profits as price continues to move to the upside. Confluence simply means multiple confirmations giving us a reason to buy or sell. This is what I mean. Here's our two lows. We're going to connect our trend line. Price shoots up, comes down to our trend line. Remember, that gives us the indication to buy. I'm going to draw a line. Price is right where the previous resistance at, and it's where our horizontal support is and our vertical support, which is our trend line. Because it's where price was at before in the past, which was our resistance, and it's currently on our vertical support line, that gives us confluence that price is more likely going to move to the upside. And it pulls back down and continues up. Guess what? Here's where price was at before. There's our break and retest. We will buy here, and it continues to push to the upside. Same here. We see price comes and pull back down to where our previous resistance is, and then we can continue to buy. So that's all I have for you today. I want you guys to continue to like, subscribe, and share this video. And I'm going to continue to do my best to provide you with quality Forex education. I'll see you in the next video, guys. God bless.